Hello everyone, welcome to another exciting episode of my weekend series dedicated to mastering the art of price action based technical analysis. In today's video we will be diving deep into the XAUUSD chart, exploring how to capitalize on the next move in light of recent US macro data signaling a pause in the Federal Reserve's interest rate hikes. Last week's trading setup provided us with a solid platform for leveraging the bullish momentum, yielding over 1,200 pips from multiple entries, as you will see highlighted in this commentary scrolling on your screen right now. I want to wish everyone who was part of this profitable journey a big congratulations to you. And for those of us who had missed out on the daily commentaries on this asset and want to catch up for educational purposes, you may find the link in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. With the benchmark 10-year US Treasury yield dropping to a more than 2-month low, the question arises, will this factor provide support or serve as a foundation for the stability of gold prices in the financial markets? Well, in this episode, we will be dissecting the current market structure from a technical perspective using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action in the days to come. But before we proceed, it is crucial to emphasize that this video is for educational purposes only and should not be considered financial advice. My goal is to provide you with insight into the XAUUSD chart and enhance your understanding of price action analysis. Remember, Forex trading inherently carries risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's delve into the details. So I won't delve extensively into the daily time frame as we already covered its structure in detail in my previous videos. You can find the links in the description box for your reference purposes. However, I do want to highlight the importance of the 1,980 level, as it will be playing a major and crucial role in guiding our decisions for the upcoming week. And in fact, if you look at the structure closely, in fact, since the month of March, you will see how this level had continued to help decide the direction of price action. And in fact, since price broke down this level in the month of May, price action had continued to trade below the structure to further emphasize the strength of the sellers in this particular market. However, we saw a little bit of a breakout here about at the beginning of this month, but as you will see, price action is back into that structure, as we saw last week trading session, how price closed around the 1,980 level with a shooting star candle, which technically reveals the presence of sellers at this particular point in time. Now, going into the new week, the question is, will selling pressure persist again, just like it has been doing in the last 6 to 7 months, to push price to the downside? Or are we going to be seeing a scenario where price will break out of the 1,980, making it a new platform to push price to the upside? Well, to answer that question, I've been able to identify a simple setup that we will be using to position ourselves for the next move in the upcoming week. But before we go into the 4 hours time frame, I would like us to run through the economic calendar so that we can keep tabs with the fundamental factors that will be driving the market sentiment for this week, as they usually manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and better timing to position ourselves in such a way that we can capitalize on the next move prior, during, and even after this event. So the first high impact event based on the asset we are monitoring this week, so we will be focusing on events from the United States. Now, the first event for this week is coming in on Tuesday, November 21, and this is going to be the publication of the FOMC minutes. And this is a very, very important event as it gives us detailed account of the discussions, debates, and decisions made by the committee members regarding monetary policy, economic conditions, and of course, future policy actions. Then fast forward to Friday, November 24, we'll be looking forward to the S&P Global publications, which of course is seen as an economic research report, which covers a wide range of topics, including market trends, credit ratings, economic indicators, and industry insight. So these are the high impactful event majority in the market will be looking forward to this week. And of course, we all know as technical traders, we do understand that the anticipation of such events usually affect the market sentiment, which will reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. Now, if you look at the 4 hours time frame closely, what I did here was to take into consideration the nature of price action since the mid-month of October. And if you look at the structure closely, you will see our price action appear to be within a descending channel, as you will see after connecting the series of lower highs since last week of the month of October. We have the resistance line of the descending channel, while the connection of the series of lower lows here gives us the support line of the channel. And don't forget that we have the key level, which we identified on the higher time frame at the 1980, which is exactly where price action is at the end of last week. Now, if we zoom right into what has been going on here since Thursday's trading session, it is quite clear that this market is gripped with an indecisive phase at this point, as you will see price action, though has broken out of the resistance line of that descending channel, but has been confined within a range in the last 2 days to further emphasize the level of indecision at this juncture in the market. And of course, you know how we do it in this community. Whenever we identify a flat range like this, which emphasizes the uncertainty in the market, we have no other choice than to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, with the situation we have right this point in time, we want to see how the market participant will be reacting to this juncture. If price breaks down and selling pressure persists below the 1980, we shall be back within the seller's territory, which of course will be within the descending trend line, and we shall be looking out for selling opportunities here. However, if buy pressure persists above the 1980, leading to the breakout of that resistance line of that channel at the 1992 level, then at this point in time, we shall feel very comfortable adding more positions to the existing buy positions on our XAUUSD chart. So these are my views here on the XAUUSD for this week, as our center of focus will be between the 1992 and the $1980 level, where depending on the direction of the breakout will give us an insight into where price will be going for this week. But trust me, I will be with you in the comment section to give you updates on how we intend to capitalize on this trading opportunity in the weeks to come. If you have found this content helpful and useful in making your independent trading decision for this week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial to them too. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.